India's journey in innovation and adoption with respect to new financial technologies is a story of unprecedented transformation. The scale of this transformation can be best understood through the numbers that define it. In a span of a single decade, we have connected a population equivalent to that of the entire European Union to the formal banking system, opening over 56 crore Jan Dhan bank accounts. India is now ranked third in the world for the number of Fintech companies and also leads in digital payment volumes, having processed over 18,580 crore UPI transactions worth 261 lakh crore rupees in 2024-25. Nearly half of the world's real-time digital transactions happen in India with adoption rates of 87% compared to the global average of 67%. Government of India has leveraged digitization by introducing direct benefit transfers as a system for all its social welfare schemes, which has significantly actually boosted the welfare efficiency by reducing subsidies and leakages. It has resulted in a savings which is worth mentioning to this August gathering. The savings is 4.31 lakh crores of Indian rupees. And between 2014 and 24, this is the saving of 4.31 lakh crores because of DBT being adopted completely by the Government of India, 16-fold rise in beneficiary coverage. So not just your saving, but actually you've reached a larger number of beneficiaries. Technology has facilitated it for us. So a shift from paper-based disbursals to direct digital transfer has ensured that public funds reach the people that they are meant for and not for ghost entities. So the DBT model presents a valuable lesson, and as the first spark, I would say, it can also absorb a lot more better technologies, better innovations, better ways of handling technology, and so on. You have a world out there for you all to be innovative, even about improving the DBT's efficiencies. So the contributions of startups, engineers, entrepreneurs, investors in this have been immense. So the Government of India's policy has actually to play its role in nurturing the growth and innovation of fintech sector through a balanced approach, balanced mix of policy support, digital public infrastructure, and forward-looking regulation has actually shown the results. I'll list, instead of getting into details, Aadhaar, UPI, Account Aggregator Framework, DigiLocker. All of them have really decisively changed the contours of how public finance is handled for the betterment of the citizen. India has actually stepped decisively into the global AI arena with the launch of the $1.3 billion India AI mission. It is a comprehensive strategy spanning the entire AI value chain. And that is the reason I first of all wanted to say that amount not in rupees but in US dollars. Commissioning of 34,000 GPUs at concessional rates to spur innovation across startup ecosystem, researchers and academic institutions. Launch of the AI, which is India AI Data Sets Platform, AI Kosh as it's named, incorporating 2,000 plus verified and indigenous data sets, use case across sectors, and sandbox environment. supporting development of 4 foundational LLMs that cater to India context by supporting vernacular languages and are multimodal in design. Setting up 4 centers of excellence and India Future AI Skills Program to boost India's AI talent pool. So these are first lot of steps that we have taken with the AI, meaning India AI mission. Now a word about the Gift City. Gift City is a bold vision, an initiative of the Honorable Prime Minister, Shri Narendra Modi, even when he was the Chief Minister of Gujarat. Now it is in a full bloom. It presents immense opportunities to the Fintech sector. GIFT International Fintech Innovation Hub is the city's Fintech incubator and accelerator where Fintech startups can secure funding, obtain legal guidance, and scale their businesses. It has a network of industry experts, investors, mentors, and corporate bodies that will help Fintech drive innovation and support them for their growth. Fintechs must leverage, I'll appeal to you all, you must leverage opportunities in the Gift City. In this context, I am pleased to launch today the foreign currency settlement system in the Gift City. So that tells me I don't need to explain what it is. You're quite aware of the importance of such a step, and I'm indeed grateful to the GIFT Authority who are all present here for having come forward on this. So, for those of us who would like to hear what exactly it is, transactions in foreign currency by entities in IFSC are currently settled through the correspondent banking arrangements, which is routed through different participants and multiple nostro banks. Such transactions are not settled on a real-time basis and usually settle with a lag of up to 36 to 48 hours. That's the present story. But the foreign currency settlement system, which gets launched today, seeks to solve this problem by doing a few things. One, facilitating seamless and efficient settlement of foreign currency transactions within IFSC on a real-time basis, not 36 hours, not 48 hours, just as it happens. Enhancing liquidity management and operational resilience. Ensuring compliance with regulatory oversight under the Payment and Ensuring Settlement System Act, that is the PSS Act, by the IFSA, the authority which is there. So, the FCSS will be a payment system within the IFSC designed for settling transactions in foreign currency on a real-time or near real-time basis. So I congratulate the IFSC on taking this kind of a forward-looking step. So with the operationalization of the FCSS, GIFT IFSC will now join a select list of financial centers that include Hong Kong, Tokyo, Manila, and so on, that have the infrastructure to settle foreign currency transactions locally. So together, these initiatives spanning policy, infrastructure, AI, innovative culture, and also regulations illustrate how Government of India has laid the groundwork for a vibrant, inclusive, and forward-looking fintech ecosystem that is powering India's rise as a global fintech leader. We have also been working to strengthen the factors that support functioning of GCCs in India, including framing appropriate policy framework. India's 1,800 plus global capability centers are at the forefront of the country's remarkable transformation into a powerhouse for technology-driven innovation and impact. Over the past decade, India's GCC landscape has evolved from cost arbitrage hubs into high-value engineering, R&D, and innovation centers, particularly in the banking, financial services, and insurance domain, the BFSI as you use an acronym. India's Fintech GCCs are enabling multinationals to, 1, launch new digital financial products faster, reduce costs and time to market, and deploy AI-led financial services at a global scale. So India offers an unparalleled opportunity for Fintech GCCs to scale innovation, as we have a deep talent base and also a favorable government policy. India offers access to cost-effective and high-quality technical, entrepreneurial, and financial services talent pool. Global financial services leaders have immense potential to build, to scale, and to transform from India through setting up Fintech GCCs that not only serve the world, but also shape its future, the financial architecture. The theme of the GFF 2025, Empowering Finance for a Better World Powered by AI, is apt given the rapid developments in AI across the world. Just as the Internet and mobile technologies defined the first chapter of Fintech growth story, the next, or what is being shaped now by AI, blockchain, and intelligent finance. Fintechs must use the technologies to design better product and services. Thank you. Next. So fintechs must use the new technologies to design better product and services. They must also continue to enhance transparency, predict risks better, and personalize services responsibly. So India contributes 16% of global AI talent and is among top 3 talent markets. Indians are the second largest contributor to public Gen AI GitHub projects. It is estimated that all AI-enabled GCCs will, in all likelihood, contribute 30 to 35% of revenues of the India's AI services market by 2028. 30 to 35% of revenues of the India's AI services market by 2028. The potential for becoming the global hub for India and for building various AI products and services is very high, is not an exaggeration. Given the large population, with nearly 650 million smartphone users, we should create scalable models for sectors beyond finance, such as healthcare, education, agriculture, MSMEs, exports, and so on. India can also build AI products that fit diverse use cases across the world. It can be a laboratory for developing and testing AI aids. Our AI stack must be rooted in Indian languages, local contexts, and multimodal interfaces so that it can be widely accepted and accessed by our citizens. Focused approach across the AI stack can make India the AI torchbearer for the global south. So as this new wave gathers momentum, Fintech innovators, investors and regulators all have a shared responsibility to build systems that are not only innovative but also resilient, secure and inclusive. Undoubtedly, artificial intelligence is transforming finance, transforming governance and also everyday life. But as we harness its powers, we may remain conscious that technology must always serve humanity. Even as AI opens extraordinary possibilities, we must confront its darker side. The same tools that power innovation can be weaponized for deception and for fraud. I'm not personalizing it, but I can say I have seen several deep fake videos of myself being circulated online, manipulated to mislead citizens, distort facts. It was a reminder of the urgency with which we must strengthen our defenses. The new generation of fraud is no longer about breaching firewalls. It's about hacking trust. Criminals are using AI to mimic voices, clone identities, and create lifelike videos that can manipulate people. So, in order to address the impersonation and false representation targeting investors, it is heartening to note that SEBI, in partnership with NPCI, has launched a dedicated @valid, which is a UPI handle for SEBI-registered investor-facing intermediaries, with category suffixes such as .brk for brokers and .mf for mutual funds. Major brokers covering over 90% of investors and all mutual funds have already enabled it. The @valid handle establishes a verified, secure payment channel in the securities market while preserving existing payment options, improving safety and accessibility without disrupting user preferences. So SEBI has rolled out SEBI Check, which allows investors to verify UPI IDs and bank account details, that is the account number plus the IFSC, of registered intermediaries across the UPI, NEFT, RTGS and IMPS before initiating payments via the web portal and the Sarthi application. So the framework embeds responsible use of technology through privacy, preservation, verification, secure processing, audit trails, continuous improvements which are informed by flagged mismatches and user reports. So, this is a good moment, I would think, to reflect on what kind of financial future we wish to build and how do we get there. So I have 4 messages, each with a few details. First, fintechs must essentially focus on the fundamentals, such as revenue growth, innovative product offerings, profitability, risk and compliance capabilities. So within that first message, I would like to add, as many of the fintechs mature, There will be challenges of meeting heightened expectations around financial performance and regulatory compliance, while continuing to innovate in the face of emerging competition. Focusing on fundamentals provides the cushion to continue innovating, investing in R&D, and weathering downturns. Firms that balance innovation with prudence can pivot faster and scale more responsibly. Sound risk and compliance frameworks help maintain customer confidence, which is critical for long-term survival. The future of reward will reward resilient innovators and not just disruptive entrants. The second message, global fintech revenues are projected to touch $1.5 trillion by 2030, in less than 5 years. But rapid growth also brings responsibility. In my second message, I'd like to say a few things more. In a country as diverse as India, with varied levels of literacy and digital familiarity, the shift from offline cash-based system to online fintech ecosystem comes with real challenges. Digitalization introduces significant challenges in terms of cybersecurity breaches, digital fraud, to unethical lending practices. As millions of citizens join the formal financial system, the focus must be to expand beyond innovation towards trust, safety, and inclusion. Speed and scale must walk hand in hand with safety. Regulations too must evolve, ensuring that the fintech revolution remains secure, responsible, and sustainable for the long run. My third message now, responsible regulation is not a brake on progress. It is a seat belt for safe acceleration. Through the RBI regulatory sandbox and the self-regulatory organizational framework, SRO framework, we have created space for experimentation with accountability. These mechanisms encourage responsible innovation in a supervised setting. Work with the regulator. Share insights with from your plans and experimentation so that the next generation of fintechs can build on stronger and safer ground. My last and the fourth message, fintech sector must help cover the small remaining gaps in our financial ecosystem. What are they? Bring your creativity and technological prowess to solve the persistent challenges of credit access for our MSMEs, financial inclusion for our women and gig workers, and the development of innovative green financing and sustainability-linked products that can empower our transition to a low-carbon economy. After all, one additional observation which many of you all would like to hear with a bit of a hesitation, AI itself requires huge power to run it. You need to have a sustainable green supply of the guzzler that AI is. We cannot overlook that fact. Help us build the tools that will power a secure, sustainable, and equitable future. So to conclude, 3 decades ago, in 1995, India's first ever mobile phone call was made between Delhi and Kolkata. What seemed like a modest technological milestone ignited a revolution that reshaped how 140 crore Indians live, work, and connect. Mobile phone has evolved from a luxury into an indispensable tool of empowerment. Now, it is now India's bank, classroom and television, the centerpiece of its digital transformation, India's digital transformation. So as we move towards Viksit Bharat by 2047, we must all collectively ensure that technology continues to serve as a bridge and not as a barrier. It must deepen trust, safeguard privacy, and uplift every citizen it touches. To fight the newer challenges, from deepfakes to cybersecurity breaches, we need a whole of the society approach. All of us will have to be in it together to address that threat. Every part of the ecosystem has to play its role. The regulators, the fintechs, the startups, the citizens. Each of us must act with shared purpose and mutual trust. So our national mission must be to create a system that is not only the most innovative and inclusive in the world, but also the most trusted and resilient. So thank you for listening to me patiently. Wish you all the very best for the next 3 days.